to our webinar today. I'm Tracy Prachu. I'm the Executive Director of the Roofing Contractors Association of Washington. I probably know most of you, but in case you don't know me, here I am. And we have Gary Smith with us today from the Independent Business Association, and he is our legislative consultant, and he's going to go over a lot of really important things that we need to know during this coronavirus issue. So without further ado, I'm going to hand it on over to Gary.
Good afternoon. Glad you joined us. We're going to talk about a lot of stuff today. A couple of things. This first slide shows you the things that we're going to talk about. Most of you may not be aware of the new Family First Coronavirus Response Act, but it has new requirements that you have to comply with. The second is the Washington State Essential Business Order that's out there now. And finally, we're going to talk about the money available from the federal government to help smaller businesses. You'll see on this slide, I've highlighted the number 1 up in the top right-hand corner there. The key slides are all numbered, so you can figure out what slide we may be talking about. You might write it down if you have a question, so we know what slide you're talking about. So we have to get a little business stuff out of the way first. We cannot engage in any antitrust activities as we're on the phone or on the meeting, and those involve a number of different things. We can't talk about hourly rates, cost of labor, profit margins, all that kind of stuff. We can't talk about who we want to do business with or we don't want to do business with. So we need to stay away from all of that. There's a disclaimer here. This is general information. This is not legal advice. It's not tax advice. The green, you're going to understand that everything is still being put together. As I put this presentation together for you, things changed. So it's changing as we speak, and it's going to continue changing. We're going to give you ways to keep up on those changes. Again, if you have legal questions or need tax advice, talk to an attorney or a tax preparer for that advice. We're going to talk first about the Family First Coronavirus Response Act, and it involves a number of items. It requires health care benefit coverage. There's a new employee retention program as part of it. Emergency paid sick leave. This is different from the state sick leave, and in addition to. Fourth one is the emergency family and medical leave expansion. And finally, there's tax credits to offset some of these costs. So we're going to jump into this quickly. So it's effective on April 1. You're already supposed to be in compliance with it today. It applies to employers with 1 or more workers. This is different from the federal FMLA law that was, if you had fewer than 50 employees, you were exempt. This applies to 1 or more. There is no small business exemption. Pay attention. Okay. On health care, all employers that are providing health care must provide COVID testing at no cost to their workers. You need to check with your insurer to make sure that they are in compliance with this, so you're in compliance with this. We're going to switch to the new paid sick leave, the federal paid sick leave law. Again, this is in addition to the Washington State paid sick leave. So it applies to all employers with 500 or fewer workers, meaning 1 or more workers. There's 80 hours of paid sick leave. Pay amount is the greater of the regular pay or the minimum wage, whichever is higher, not to exceed $511 a day. In some cases, may be a cost of $51,110 for isolation. We're going to get into that more in detail. $200 a day for care of others to a maximum of $2,000. The employer cannot require the worker to take other leave first. So there's different leave benefits for different situations. There are actually 6 different situations. Below under it says important information. Here is a link. Most of these links work. Some of them that are broken into more than one line may not work in this presentation. At the end, I will be providing you a website that you can go to get all these links, that we have verified all of those links work. So here are the 6 different situations where paid sick leave and the Extended Family and Medical Leave Act apply. Mandated isolation, self-quarantine, if advised by a medical provider, experiencing symptoms and you're looking for medical diagnosis, caring for an individual described above, that would be a child, a spouse, a family member that's either mandated isolation or quarantine as advised by a medical provider. Caring for a child if the school or daycare is closed due to the COVID, or other reasons as determined by the Department of Health. Again, things are changing. Be aware that this stuff is mobile. I don't know, can we do questions at this point, Tracy?
Yes, they can type in any of their questions, and then you can answer them. I don't see any questions at this time.
Ready? So we're going to switch to the new federal paid emergency family and medical leave. Again, this is different than the FMLA law that has been in place for a long time. It applies to employers with 1 or more workers. The employee needs to work for the firm for at least 30 days before they can take this leave. The worker would not be able to telework in order to qualify for this benefit. If they're caring for a minor child, they qualify. And they have taken 10 days of leave not funded by this program. In other words, first one provided some relief, the sick leave, but they have to have 10 days of leave. They can use vacation leave, they can use PTO, they can use a number of different things, but they have to wait 10 days to get this leave. So the benefit for this leave is 2/3 of their regular pay, not to exceed $10,000 for 10 weeks. Duration, up to 10 weeks. Applies to employees with 1 or more workers. That's really important. No 50 or fewer employee exemption. It's up to 10 weeks. This is a critical issue here. This is restoring the worker to their prior position. Yes, you have to restore the worker to a prior position unless you have fewer than 25 employees. It doesn't apply if the worker's position is no longer open or available. You got to make a reasonable effort to restore the worker to an equivalent position. There's no equivalent position can be found. Must keep in contact with the worker for 12 months, offering any equivalent position to the worker. There is a small business exemption for this leave. This is if this kind of a leave would impose a very serious hardship on your business and jeopardize the business's future operations. This exemption is not yet sorted out. They don't know exactly how it's going to work yet. We don't know how it's going to work yet. But there is this exemption available. So there is a tax credit to try and offset the cost if your business is stuck with this. Now remember, This is only for COVID-related illnesses or leave. This is not extended to everything. It's just for COVID-related sickness or leave. And we're going to give you the link to this presentation. This presentation goes through, this is just one of a number of examples of how you figure out what the benefit is to an employee. They've got, I think, 5 or 6 different situations, and they show you how to figure out what that employee is going to get paid under these 2 programs. This is an example of the tax credit that we're going to talk about in a bit yet. But you'll see that you are going to get a tax credit on your federal, FICA, and Medicare taxes. It's an interesting program. It's very complex, by the way. I'm going to give you the link to this presentation done by a group of CPAs. I think they did a fine job. I think it's a good source for information for you. Here's the link in the middle of this page. This is complex stuff. The link below that is an important link for you to use to look at their presentation. It's about 30 to 40 minutes long. The one down below that is more information from the Department of Treasury, the IRS, and the Department of Labor about how this program is going to work. This is effectively a new program that's approved by Congress in early March, and it's already underway. Be aware. The IRS guidelines for employee retention and the tax credits, it's a very complex area. Here's another link for more information from the federal government about how this program is going to work. Again, more important links for you to use. This is a complex program. If you have an individual working for you that is affected by the COVID, you need to know this stuff. There's more on tax credits here in this link. We have a new poster you need to post. The top link is that poster. There's more information, frequently asked questions about the poster in the program at the second link on this page. And finally, there is a webinar from the U.S. Department of Labor about how this program works. It's okay, it's not great. It's a source of more information. If you get into this program because one of your workers has a COVID illness or is taking leave, you probably need to spend some time looking at this stuff. This is a copy of what the new poster looks like. You can get it using that link on the previous slide. See if we have any questions about all of this.
We had a few questions, which I've answered mostly. They're just to do with, will this be available in a recording afterwards, which is yes, and asking about getting a copy of all the slides and links, which is a yes. So, and then whether you're going to be talking about PPP, which is a yes. So go on from there.
Okay, thank you. Okay, we're going to switch to the state essential business order. It's a huge challenge for small businesses. I've got a lot of small businesses that are very upset about the thing. I'm in fact starting to write the April IBA Small Business Report. The lead article is going to be about COVID-19, and part of it is this order. And the bottom line, so you know, is the state budget is collapsing. Governor Inslee can't afford to keep this non-essential business order in place very long because their revenues are going to tank. The main source of revenue is sales tax. If you're not making any sales, they're not getting any money. So the bottom line is it's going to cost him dearly. There's a huge amount of pressure from all across the state for him to lift the thing. So on March 23rd is when this all started. He called it the stay-home order and required the closure of non-essential businesses. He said essential businesses can stay open. You want to go find the non-essential business, or I should say the essential business definition. It's on this link here, 14 pages long. This is part of that discussion talking about in the construction and operation inspection of essential public work, facilities, bridges, water, sewer. Government is effectively working, the private sector is not. Workers such as plumbers, electricians, and exterminators are allowed. So it's challenging for somebody in the roofing industry. They allow work such as road and line clearing and other things, including the disposal of solid and hazardous waste, but it does not include roofing as yet. They docked on the 25th of March a clarification that he wanted the construction industry to take a pause. And that's pretty frustrating, but that's what he ordered. That's more of this pause. And he talked about, and this is going to be critical going back to work. Social distancing is still going to be with us if we open up, and that's going to be a huge deal. And you can expect WSHA inspectors to be looking for that if they're out and about and see you working on a roof. So the 6 feet separation between workers is going to be critical. He then again had another press conference on the 26th, basically saying, cut down all construction except for keeping essential things open, such as grocery stores and other essential businesses. This is a letter that the roofing industry has received from the governor asking that we be included in the roofing industry as an essential business, and he effectively said no. This is the rest of that letter. So there's a process in place right now. If you go to their website, the process in place for individuals or whoever to file a notice of violation. The first violation, you get a warning letter and a clear notice to stop what you're doing. The second time you get one of these, you may be issued a citation and possibly more significant action from the state. A third violation, and you are subject to the Attorney General taking you in under the Unfair Business Practices Act and enforcing that with a $2,000 penalty and possibly an injunction and other penalties. So I was out on the road this morning, actually. I went down to Tacoma and came back. There are some firms out working. You can see their trucks, they're well marked and all that. They're out working. It's probably someplace between 10 and 20% of what I would normally see if I was driving to Olympia, the number of construction trucks out there. So, there's some things you can do about this. I think that you all ought to be using this with your employees and your potential customers to basically say, we got a problem here. And these are two places. The first one is to report a violation. And I think it's appropriate to use that same website to say there's a problem here, okay? The second one is the one where you'd ask the state to give you a central business classification. I think using both of these websites, using your customers, your employees, and others, as many people as you can get, just loading them up with complaints and concerns about the way this is being handled is probably the quickest way for you all to get back to work. Any questions?
Yes, we do have some questions. In your opinion, what is essential in residential roofing?
Well, it doesn't matter what my opinion is. He's already back on this slide back here. Basically, he says, in this case, roofing projects supporting non-essential activities may be completed to prevent spoilization, avoiding unsafe. That'd be there's clearly a leak in the roof and there's a problem and that sort of thing. I think you got a position to be able to stand up on. You might ask your friend Rob McKenna when you're talking with him on the 16th if this is still around about the issue of somebody's got a roof leak, they need it fixed, especially if you have a temporary patch on the roof. It needs to be fixed, and I think you've got legal grounds, but he's an attorney, I'm not, to be able to go in there and say this needs to be fixed. So that's really where it's coming from, is that you're taking a bit of a risk, but I think if you got a good basis that there's risk to the building, you have the right to work on that building. I think you can make a good case. But again, I'd ask Rob McKenna, you're going to be using him for a good resource.
So another question, you've kind of answered part of it, but are we limited only to emergency and repair work?
That's effectively what that letter says, yes. I mean, new construction, I don't know how you make the case for new construction. You could try, but that's pretty hard to do. If the builder was saying to you, I've got to get this dried in, I got to hang drywall, okay? And drywall shouldn't be working either. Framers shouldn't be working. Nobody should be working technically for new construction. If it's public works, if it's a public building, it's okay for them to build it. Yes, you could probably roof a public building. But private, they're saying at this point, no.
Will they pull over a truck if they are working, like going to the dump, etc.?
I don't think so. I don't believe that's the case. Solid waste management is okay. That's part of the executive order saying solid and hazardous waste management.
Okay, so this goes along with that is how will we be disposing of products? Will the landfills be open? I think you just answered.
I assume they are. The garbage trucks are still running in my neighborhood. I think they're probably running in most neighborhoods. That's allowed. That's an essential business.
Is it okay to go out and do a zero contact residential estimate? I ask this because it has been deemed okay to do a home inspection in preparation of a listing of a home sale.
I don't think, if you're not working, I don't think it's an issue. But, you know, you're going to find out quickly if you get a letter. If you get a letter, that's giving you an indication that somebody's ratting you out.
Okay, and that's all the questions we have for this segment right now. More come in, I'll let you know later, and we can move forward.
We're going to talk now about money. Okay, there's two major federal small business assistance programs. One's the federal Paycheck Protection Program, and the other one, people call it EIDL. It's Economic Injury Disaster Loan Program. And we're going to talk about both of these. So, we're going to talk about the Paycheck Protection Program first. At the end of this presentation, I have a chart that sort of compares the two different programs, because there's a lot of information here, so hang in here. The whole goal behind this program is to try and keep your business intact and ready to operate as soon as the COVID-19 outbreak is deemed ended. So that's really the goal of this program. The funding is primarily focused on paying your workers, even including tips. You don't have to worry about that in your industry, I don't think. And things like vacation, leave, that sort of thing. If you have a severance pay policy or something like that, it'll include that. It includes paying for worker benefits if you have a health care program or other similar, including retirement programs. Help you pay your local and state taxes, their state taxes, I should say. Interest on any other debt or obligation incurred before, the obligation was incurred before February 15th. That's getting to be a gray area. Be careful on that one. So, the program is a potentially forgivable loan up to $10 million, meaning you don't have to pay it back. You have until June 30th of 2020 to restore your full-time employment or employees at their previous salary level that you paid to them between February 15th and April 26th. And you need to pay them that amount of money. The forgiveness, meaning you don't have to pay the money back, okay, is if you use the money to pay your workers' salary or wages, workers' benefits, business mortgage interest, rent, and utilities, and other allowed expenses. Again, the other allowed expenses is sort of getting to be a gray area. The big key here is that you need to spend 75% of the money you get in your employees, payroll, and benefits. There's the link down at the bottom of this page is the new interim final rule. Understand this was passed by Congress like on the 31st of March. They came up with the way this program is going to work technically in 1 week's time using this interim rule. If you have questions, you can read that rule. It'll help you understand exactly what they're looking for. Unfortunately, there's a lot of bankers that haven't had the information they need. I'm going to explain how you get this in just a second here. So, funds not used for payroll and other allowed costs such as rent, mortgage interest, utilities, benefits, those kinds of things will be charged 4% per year interest rate. So you get this loan by going to your bank. Now, most commercial bankers or most commercial banks are saying they're going to take care of their current customers first. Don't walk into a bank don't have a relationship with, because they're going to basically tell you to go away. Bank of America has made that very clear to its customers. We'll take the people that are doing business with us now. Don't bother us if you're not a current customer. The goal of this is to get funding out in 36 hours. That's probably going to be a wish that isn't realized, but that's what they're trying to do, is to get the money out quickly. That's the reason that they went to using the banking system rather than the SBA directly. Down to the bottom of the page is a link to the application. That link or that application has changed 3 times in the last week. That gives you an idea of how fluid this program is. The best thing to do is to start with that application and fill it out and take it to your banker. This is for firms with 500 or fewer employees, so there's some big outfits out there looking for this money. Key qualification is the banker has to verify that your business was in operation on February 15th of 2020. There is no credit qualification, there is no collateral, and there are very few documents required. Need to make a number of certifications. One of them is that it's necessary for you to get this loan, I should say, due to the COVID-19 outbreak. That's an important thing to do. How much money are you going to get? 2.5 times your firm's average monthly payroll. That is basically calculated going back to the same period in 2019 and looking at your average payroll at that point, and you will get a loan of up to 2.5 times that amount. You got to use 75% of the money to pay payroll to get forgiveness. If you use less than 75% for payroll, your forgiveness is reduced. You rehire your previous workers and start paying them when you get the loan. I don't suggest you do it beforehand because you might end up getting hung out to dry and not have the loan available to pay them. And they have to provide the lender documentation that verifies the number of full-time equivalent employees, the amount of they were being paid in the base period. And the loan forgiveness be provided based on that documentation that you provide the banker. The banker's going to figure out what your loan amount is based upon what your historical payroll was a year ago. You have to make a number of certifications. Current economic uncertainty makes it necessary for the loan to support your ongoing operations. Funds will be used to retain workers, maintain payroll. Will not, and you have not gone out and asked for one of these loans previously. They're not going to let you double dip here. Will provide the documentation the lender needs in order to make the determination of the loan amount. Loan forgiveness will be provided for the sum of documented payroll costs, covered mortgage, payments, rent, these kinds of things. Or certifications. Information provided in the supporting documents are true. If you provide false statements, you can be punished in accordance with the law. You have to acknowledge that the lender is going to make this calculation, and that's basically what you're going to get. And finally, that the lender can share your documentation with the SBA and other people so that they can verify the lender is doing their job correctly. Really important to understand false statements put you in a real difficult position. Make sure that what you're saying is totally correct and verifiable. Any questions?
Yes, we have quite a few questions. The first one is, what if an employee is a new hire? Are they eligible for the forgiveness, or did they need to be on your payroll prior to February 15th? We are seasonal and ramp up and will be in the need to not only rehire, but also have new hires.
Well, again, you're going to have to go back and compare what you were doing in 2019 to what you're doing now. It's going to be based upon the same period in 2019, what your payroll was. Obviously, you probably don't have payroll at this point because you're not working. So they're going to go back to 2019 and figure out what your average monthly payroll was, and your loan amount is 2.5 times that amount.
Okay. There was a question about what disposal facilities are open in the area, and I do not have the answers to that, and I doubt Gary does either. But if someone that's on this call knows of ones that are open in the area, please email me at Tracy, Tracey, at rcaw.com, and I will put that in our newsletter on Wednesday. Let's see, next question. When you use the phrase rehire employees, do you think that is met by moving them off unemployment and back onto normal payroll?
Yes. I've been trying to get an answer from Employment Security. What happens when we do this? Does that end their claim, or does it put their claim on standby? Employment Security is so inundated with claims right now, they don't answer anybody, including me.
Next question. When is the start date for 10 weeks to show you are paying payroll at the same levels compared to 2019? And is it just gross payroll for that period? How does that work if we are not allowed to work due to state orders?
Okay, most of the people I've talked to are strongly recommending you not go out and hire people before you get the loan. The whole idea is to try and keep your employees together, the people that you want to work with down the road, and keep them as part of your business. So 10 weeks is, I think, from the point you get the loan out.
Okay. Are part-time workers eligible to come back onto payroll under PPP as well as full-time?
Yes.
I've seen the term FTE mentioned in the bill and want to see if part-time is affected by the FTE mention.
I'd have to do some research on that one. I'm not sure.
Okay.
I can do that and share it with Tracy, and it'll be in the newsletter.
Perfect. What if we receive the loan but have workers working on essential projects?
I think you can use it for it. Just got to show that the employees were paid. I don't know if I can't tell you. This is so new. I can't tell you if they're going to go back and look at your books and try and figure out if, in fact, you paid an employee that was otherwise being paid because they're working on an essential project or not. Hard question to answer. I'll try and look at that.
We cannot qualify for both the PPP and the SBA disaster relief term loan, the EIDL.
No, you can. You can try for both of them. We're going to go through that. That's the next segment in our presentation here.
The loan has to be necessary. Does that eliminate a company that has a great deal of cash flow currently?
That's a tough one. You're going to find that in the EIDL loan also. That one under the EIDL, if you have another source of credit, you have to use that first because they're not going to compete with the banks. So under the EIDL, you're going to find that if you got another source of credit, you got to use that before you try this one. It's unclear to me under the PPP if that's the case or not. PPP is really designed to get money out and to keep employees employed. However you do that, I guess is up to you. But there is no credit requirement under the PPP, which is pretty a weird deal. Also, no collateral requirement. So, to what extent they know much about your business and that you've got a line of credit or other resources, that's unclear.
This goes back to the earlier segment. Could you discuss why any failing roof on an existing structure that is leaking does not qualify for an exemption under the spoliation and damage to structure clarification Inslee put out?
I think that's a great shot you could ask the question. I think the customer is the right one to ask the question, saying, I need this roof repaired, and, big rainstorm is going to cause me more damage. Can we fix it? That's a good customer question. They're not going to respond to the business. You don't get a shot to the business. Asking the customer to ask the question using one of those, that would be the second of those two links on that page, I think is an appropriate issue. Good way to get at it.
Okay. When they look at a 10-week period, do they care if payroll was based on the same amount of people? For example, if you meet total payroll with 5 workers instead of 4, does it matter?
I don't know how they're going to do that. The big deal is they are looking for you to bring as many people back. You're saying, I think the question goes to, I'll just use a round number. You're spending $10,000 in pay, and instead of having 5 people which earn $10,000 in 2019, there's only 4. I don't know how they're going to figure it. They're going to go based upon what happened in 2019. That's the amount of money you're going to get, and you have to show that it's gone out in payroll is the big deal. How they use the issue of number of employees is unclear, and I think it'll remain unclear. I'll do some more research and we'll send it off to Tracy so she can put it in the newsletter.
What is the latest date for an employer to rehire to qualify for forgiveness?
June 30th.
And this is just a comment. Really appreciate your time and research on this. Very helpful to all of us to get some clarity on this and know that we have an advocate out there researching things we don't have time or the expertise to do ourselves. Bravo.
Well, thank you very much. That's a very nice statement. Appreciate it.
And that looks like the end of the questions on this segment, so we can go forward.
Thank you. Okay. So we're now into the EIDL program. This is a disaster loan. So these are low interest, fixed rate loans up to $2 million. Do not go through a bank, you go directly to the SBA for this loan. That's different. And the loan amount is based upon the amount of economic injury due to the COVID-19 outbreak. So it's really important for you to try and document what that hardship is. So basically your business, I moved on. Your business needs this loan in order to deal with the outbreak, the COVID outbreak, and you won't probably be able to make it without it. That's what this loan is for. This loan provides bigger or more options for support, fixed debts, payroll. Now again, if you get an EIDL loan and you get a Paycheck protection loan, you cannot use both for payroll. Can't be done. So you can deal with fixed debts, accounts payable, other bills that can't be paid because of the disaster's impact. Maybe used for refinancing, expansion, growth, that kinds of things. It's broader opportunity under an EIDL loan. Eligibility, your industry is in a business that has a maximum of 250 employees. Some cases it's up to 1,500 employees, but you do it by your NAICS code. It applies to sole proprietors, LLCs, corporations, probably most business organizations. You need to go and see if your business qualifies. And the link at the bottom of this page is a place to make sure if you are qualified or not. Repayment, you need to prove that you have the ability to repay the loan. So there is a credit requirement. There's going to be a credit score on your business that will determine whether you are eligible for this loan or not. So when you're applying for the loan, you're asking for more than $25,000, you're going to have collateral. So that's an important issue. That's a difference between this and the PPP loan. What are the terms? 3.75% interest. You have credit available elsewhere, you are not eligible. That's an important item here. The term of the loan can be up to 30 years to reduce your monthly payments. How does the application system work? You download the necessary forms from the SBA's website. I'm going to give you that link in just a minute. Fill out the form. They suggest you save it on your computer just in case you don't want to lose it. You will then be contacted by the Disaster Loan Assistance Office, and they'll ask you to fill out potentially additional forms for them to make a determination. When you go looking for this loan on the SBA website, you'll go to this link at the top part of the page here. You'll get a screen that looks like the screen at the bottom of the page. When you go into that, you'll click on Apply Online, the blue circle. That's where you go for. Okay? You'll see a screen like this after you click on the Apply Online. And this is a series of questions that you need to answer. At the top here, it says the applicant's business is more than 500 employees. You'll probably check box 1. Now, most of the other boxes do not apply. Then you go down to review and check all of the following. You need to go down. This is a start of a certification thing, basically saying, we're doing this because we need to, and it tells all about your business. It's, again, a bunch of certifications. You get down to the bottom and you hit the continue button at the bottom, and you're going to get a new form that's going to ask you a series of questions. This is in the blue headlines here. These are the key things they're going to be asking you in that document you should be prepared to input. That's how you fill that form out. It's going to be at the bottom. It's going to ask more about additional contact information, how to contact you. And they want a little bit of personal information of how to contact you, not just the business information. So some tips for applying for this loan is make sure that you reference in your application specifically the COVID-19 or coronavirus is the disaster you're responding to. The business is new. I don't think that applies to any of you, but you can include your business plan and say this is why I need the loan. We're brand new. Your seasonal, an explanation explaining your seasonality, which you are. Business owner has multiple businesses, submit one application per county. Okay, if you're let's say you're based in King County, I would do it in King County. This is a general recommendation. I wouldn't do three of them if you're servicing both Pierce, King, and Snohomish County. I'd just do King County. Don't rush through the application. Check and recheck. Errors in the application can really screw it up. Don't mess it up. Do it right the first time. Be sure that you use the same contact information that you use for your federal taxes. They're going to go back and look at your federal tax documents to find out if in fact you're eligible or not. If you need more funds, you can ask for more funds down the road. If your request is denied, you'll have up to 6 months to apply again. Get a written request. There is a thing called an emergency economic injury grant. If your loan is approved, if you get an EIDL loan approval, you can ask for an immediate $10,000 advance. I'm going to show you that in just a second. The advance does not have to be paid back. You need to mark the grant box on the EIDL application. There it is. This is what that application looks like. This is down towards the bottom. I would like to be considered for an advance of up to $10,000. Here's the chart I was telling you about previously. This is a comparison of the two loan systems. This one starts at the top with the Economic Injury Disaster Loan, the EIDL. $2 million, you go through the SBA, it's going to be slow. Be aware of that. It covers more things than the Paycheck Protection Program. It doesn't work if you've got other sources of credit. 30-year term may require more documentation than the Paycheck Protection Loan. The EIDL provides the Emergency Economic Injury Grant of $10,000 within 3 days after your EIDL loan is approved. The Paycheck Protection Program, 2.5 times your average monthly payroll. In March through June is the base period they use. The 2.5 times is both a benefit and clearly a drawback. That's not a huge amount of money for most companies. It's forgivable. You don't need to pay it back if you use it to pay employees as required by the law. It can be used to pay the employees' wages, benefits, rent, mortgage, that sort of thing. You have a limited use of the loan funds. Quicker to get from your bank than another local bank. 4% interest rate if you're using the funds for additional things outside of the core forgivable expenses. So at the end of this is the end of the presentation. There's 2 links on this page. You need to write them down. Hopefully Tracy will put this in the newsletter also. You want a copy of these slides. You'll see the first one is a copy of these slides. That's the link. The second one is for the links. Some of the links in the presentation that are on 2 lines will not function correctly. You can get all the links on that second address down at the bottom of the page. I'll leave this screen up for a bit, see if there's any questions.
Right now, I have one question here. Is the current company's financials affect loan forgiveness with relative to savings, etc.?
Not sure I understand the question.
I think they're asking if you have a lot of money in savings, would you be able to get loan forgiveness?
On the Paycheck protection, yes. The other one you probably aren't qualified for.
Okay. That looks like that is the only question that we have right here. I did have a question. I noticed that the disaster loan assistance application has changed like 3 times in the last 2 weeks.
That's correct.
If
We're
you've already applied with one of the other versions, do you have to apply again?
Yes.
You do?
Yes.
Okay. That's good to know. So anyone who's applied for it, you need to apply again, apparently.
Yep. No, they left some information off on the first ones.
Okay. And that looks like we don't have any more questions. I want to thank everybody for attending, and especially thank Gary for his wonderful presentation. Wednesday's newsletter will have links to everything we talked about today. And if you guys have any other questions, please just send them to me and I will talk to Gary and get you answers. Again, my email address is tracey@rcaw.com.
Thank you all.
Thank you so much.